The year is 1986, and life has not been better for young Larry. After 10 years of blood, sweat, and tears, he has increased First Boston's assets by about $1 billion. But little did he know that his world was about to turn upside down. Larry Fink, one of the first mortgage-backed security traders at the time, has just caused his department at First Boston a whopping $100 million loss due to a technical mistake.
And I never forgave myself. And that's a key element that drove me.
And were you not forgiving yourself for not understanding the risk at that point?
Yeah.
Okay.
Fink's tenure at First Boston has come to a tragic end. He gave 10 years of his life to this bank. And now he is watching everything he has built turn to dust right in front of his eyes.
But it took me a year and a half to try to search what I wanted to do. And it was very clear during that year and a half, not only did we not understand the risk, there were so many other companies that really didn't understand the risk. And most importantly, the buy side, the investors had no idea the risk they were taking. And there was a great need for a company that starts off with a high concentration in risk analytics and principally in the fixed income area then.
This apparent failure is a crucial step in a series of events that led to Fink building a company that would oversee an astronomical $10 trillion, making it the largest money manager in the world, BlackRock.
$4.728 billion, up about 11% year over year. AUM $10.5 trillion, that was up 15% and beating estimates.
But how exactly did a mere investment banker achieve such a feat? Well, to find out, we will have to go back to the late 1960s and early 1970s. 1969, California. The early 1970s were a turbulent time in U.S. history, with waves of deep revolution and change throughout the country. Young people were trying out things that were considered taboo just a few years ago. The production of LSD, a hallucinogen that induces altered states of consciousness during the 1960s and early 1970s. The drug culture adopted LSD as the psychedelic drug of choice, particularly amongst the hippie community. LSD might have been the prime reason for this sudden shift in consciousness that led to a boom in creativity, innovation, and fearlessness.
Well, tell me.
Well, I just couldn't. I couldn't possibly tell you. It's here. Can't you feel it? This whole room. This.
But underneath the hope, revolution, and courage, there were systemic issues that were plaguing the entire economic system. From 1965 to 1982, a macroeconomic event known as the Great Inflation cast a shadow on the post-WW2 monetary system. From this time, inflation rose from 1% to its peak in 1980 of almost 15%.
I would actually draw a parallel to the 1970s, not only because the 70s suffered from inflation, and that's an obvious thing, and they had this same risk of a wage price spiral, but I think the issue in the 70s that was significant is that the United States in that period was losing its preeminence as an economic power. And I'm not suggesting this is permanent, but that is what is happening now. And I think that is a tremendous adjustment for American industry, for American policymakers, and for the world. It comes back to this relations with China. So those two things were happening in the 70s. And in the 70s, it was Japan and OPEC. Now it's China and Europe and the inflation. And I think that's the parallel I would draw. Just turbulent times and uncertainty, tremendous uncertainty.
But in the 1970s, cars were quite fuel inefficient. We didn't have many alternatives to petrol, and when the prices went up, we had no alternative but to keep buying. So this increase in the price of oil in the 70s was larger, and also it had a more significant impact.
It was during this time that Fink, like all the other young people around him, felt the need to contribute to improving the state of the world.
Once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it, you can influence it, you can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing.
Fink realized exactly that. However, Fink was smart, and he also understood that protesting and rallying like the hippies would have no effect. So he enrolled at UCLA to pursue a political science degree.
We all have to be better humanitarians, and we all have to be more focused on how to make sure that the political side of the world understands that peace and prosperity does work a lot longer and does shape and lifts more human beings to middle class and higher standard of living. And conflicts actually create much more global problems for the majority of the world.
But after his political science degree, he got an MBA from UCLA and decided to break into Wall Street by taking a job at one of the top-level banks in the US, First Boston, as a bond trader. No one knows why exactly Larry Fink changed course, but my theory is that just as he realized protesting and rallying was not the solution to the systemic problems, he may have also realized that politics was more about garnering power than about making a change and improving things, and that to create change, one needs to have more control and power than the politician does. And we all know what controls all the politicians: money. And this gave birth to the deep ambition and passion Fink had for money.
I have a desire to improve every day. That's what...
Just it's a personal thing.
Yeah, to drive and improve and try to grow and learn.
Fink used his ambition to rapidly rise the ranks at First Boston, becoming the youngest manager in his department. 1976 to 1988 were life-altering for Larry Fink, as they taught him to start his career from scratch after his misjudged prediction about interest rates caused him to lose everything. His reputation took a hit, and nobody on Wall Street wanted to associate with the man who made $130 million in the first quarter, only to lose $100 million of it in the second quarter. Before being sidelined for his fatal mistake, Fink was quite successful as the mortgage-backed security trader at the investment bank First Boston, from leading their bond department to eventually serving as the managing director and co-head of the taxable fixed income division. Larry Fink established the Financial Futures and Options Department, increasing the bank's assets by a whopping $1 billion.
All our money is not a single euro dollar is our money. 100% of our money is our clients' money. We have to do what our clients are looking to do.
To quote Larry's words, "Management loved us, and I was on track to become the CEO of the firm. And then, well, I screwed up, and it was bad." This time, Larry Fink decided to start his own company. For that to succeed, he needed investors and support, which came his way in the form of Stephen Allen Schwartzman. Despite his humiliating journey from future CEO to being an outcast, Fink picked up many invaluable lessons. The loyal bond he had cultivated with his team members in First Boston had a part to play in his success. March 1987. In March 1987, Larry Fink happened to be on the same flight as his old phone pal, Ralph Schlosstein, an investment banker at Shearson Lehman Hutton. The duo of early risers used to discuss financial markets before the morning rush began. This coincidental meetup while flying from Washington to New York led the two to catch up on dinner and draft a plan to start something new. Ralph Schlostein's prior experience as a Treasury official, combined with Larry's exceptional skills, birthed the idea of a company that would work on modeling financial securities, managing financial assets, and making portfolios to analyze the risks involved.
And during the dinner time, we both suggested to each other that business was changing. It was not as entrepreneurial.
And that was really the first conversation that we had in detail.
The first thing Fink did after handing in his formal resignation to First Boston was host a meeting at his house with a few of the trusted colleagues he had on his ex-team.
It was a very hard process for me to walk away from my first job.
The new venture finally began, taking the form of a bond investment firm. Larry's right-hand man, Robert Capito, sat on the mortgage trading desk, followed by Barbara Novick, taking on portfolio duties.
We started to realize they might not have a full understanding of what they were buying.
Ben Golub, handling risk management tools, and Keith Anderson, contributing with his bond analysis expertise. Ralph Schlosstein brought along Susan Wagner and Hugh Frater, two of the most skilled mortgage bond specialists to the newly established firm.
I mean, our job is to give opportunities for long-term investors that they can earn a return and that they can have a healthy life in the future with dignity.
Right.
But for the firm to launch, the other co-founders needed money. Larry Fink turned to his address book and reached out to former employees of Lehman Brothers, Steve Schwarzman and Pete Peterson. At that time, their firm, Blackstone, was swiftly rising in the private equity industry. Blackstone was interested in the offer of a 50% stake and agreed to host the new firm in their office space along with a $5 million loan. Knowing the business minds of Larry Fink and Ralph Schlosstein, it was quite predictable that they would take advantage of Blackstone's growing reputation and form their new firm, Blackstone Financial Management, BFM. Steve Schwarzman was no ordinary man. In fact, he was one of the most influential personalities on Wall Street, and he dedicated 30 years of his life to establishing Blackstone as a successful company.
Take a bunch of money, because banks always have money, and just dedicate that money behind those bonds and go ahead and do whatever we want to do.
One of his powers was finding the best candidates to hire. His eye for talent saw Larry Fink as a perfect out-of-the-box thinker.
Has much to do with understanding what's on the other person's mind.
One lesson Larry Fink learned the hard way was to be risk-conscious. He had the upper hand, as the competitor companies didn't consider risk analytics, specifically on the level Larry Fink did. During a time when the majority of investment decisions were made using traditional analysis and intuition, Larry Fink believed in the power of data to uncover patterns and guide investment strategies. He relied heavily on the unconventional approach of statistics and algorithms. Once Blackstone Financial Management, BFM, had its operation running, the company focused on attracting clients for the fixed income fund and the advanced tech service that was under development. Unlike variable income securities, where payments can go up and down based on different factors, fixed income funds provide fixed returns or dividend payouts until the bonds hit their maturity date, which is an agreed upon date of when an investment is going to end.
We saw more and more our clients having to ask us, the sell side, as to how their securities were doing.
To prevent the mishap that happened with Fink at his previous job, a service named Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network, was designed. Larry and the other co-founders had to build it from scratch, and its initial version was coded on a Sun workstation. For the next 6 years, Larry and his team were on a roll. Thanks to the prestigious connections of its co-founders, Blackstone Financial Management managed a massive amount of around $23 billion. The bond market thrived, and people were attracted to the pension plans because of the reputation of Larry Fink. Not only this, but the company also expanded from 8 core partners to approximately 150 employees. Larry Fink was slowly getting back to the top, regaining the reputation he had lost. At the same time, the company was approaching a dramatic end with Blackstone. Larry wanted to attract top talent by offering more stock options, and Steve Schwarzman disagreed with him over this. Schwarzman was infuriated by the new hires Larry brought in with the offer of equity stakes. As this meant giving up some of the ownership of Blackstone, Larry Fink decided that BFM and Blackstone needed to part ways after Steve Schwarzman rejected the plan to dilute Blackstone's ownership. Larry Fink and Steve Schwarzman, both highly driven individuals, differed in their approaches. Steve Schwarzman, being an investment banker, was true to his roots of avoiding the risks of losing money, while Larry Fink, being a trader, never shied away from taking calculated risks.
And I believe that's where it's going. We have seen billions and billions of dollars moving into more sustainable strategies.
Another issue that arose before the split-up was deciding on the company's name. Now, all of BFM's funds had tickers starting with the letter B, a code that was used in regulatory filings and by data providers to identify investment vehicles. Larry and the team scratched their heads thinking of the new name because, as per the agreement with Blackstone, they couldn't have Black or Stone in the name. Bedrock was taken into consideration, but it reminded many of the animated show The Flintstones. Fond of the name BlackRock, the founders used the example of the split between Morgan Stanley and JP Morgan to convince Steve Schwarzman and Pete Peterson. Struck with the idea of paying homage to Blackstone, Schwarzman and Peterson eventually approved. And this is how the world's largest institutional investment manager, BlackRock, came into being. It was the year 1994 when Blackstone's stake in BlackRock was sold for $240 million to Pittsburgh's PNC Bank. The bank then merged the money with its operations before taking it to the stock market. BlackRock's assets had reached an impressive $165 billion by 1999, when the long-awaited public offering finally took place. An initial public offering, IPO, is when a private company goes public with its stocks, changing ownership from private investors to public shareholders. Valued at just under $900 million, the initial public offering was such a flop in the eyes of Larry Fink that the only thing that stopped him from canceling it was Merrill Lynch's chief executive's call, telling him to just do the IPO. He advised Larry with a yelling tone that it would be a distant memory if he performed well over the upcoming 4 to 5 years. And this is exactly what happened. BlackRock's bond-oriented business skyrocketed right after the dot-com stock market bubble burst. The company attracted investors who sought stability and consistent fees. Soon after, BlackRock didn't need to attract clients, as the firm started acquiring competitors using its currency in the form of shares.
We need to reimagine finance.
Stephen Alan Schwartzman, who is currently the billionaire chairman and CEO of the Blackstone Group, expressed his regrets about selling the mortgage securities unit that eventually became the largest money manager worldwide. A mistake he called heroic during an interview in 2013 taught him the humbling experience of stumbling on success.
BlackRock is a financial giant. It's the largest investor on planet Earth.
Larry Fink's BlackRock Inc. oversees $10.5 trillion in assets, while Blackstone stands at a total of $39.706 billion for the quarter of this year, 2024. With BlackRock's current market capitalization of $115.42 billion, Mr. Schwartzman's 9% personal shares would have been worth around $10 billion today.
There's a lot of evolution. I made a whole bunch of mistakes earlier in our business's history because I actually didn't really know what to do.
Larry Fink's BlackRock has been one of the smart firms that avoided unwanted acquisitions by leveraging its listing to transform itself from a bond investment company into the global sensation it is today. Let's see how the historical growth of BlackRock has been over the years.
BlackRock rose to the top of the financial system in a short span of time. After its IPO in 1999, its stock has increased 7,539% through December 2020.
The first ever deal Larry Fink made was with insurer MetLife in 2004. BlackRock gave the company $375 million in exchange for a money manager called State Street Research. But a deal that one would call transformational came in 2006, when Larry Fink used his genius to crack a deal with the investment firm Merrill Lynch. All Fink needed to work his magic was the information that the new CEO of Merrill Lynch was thinking of selling the bank's money management division. A provisional agreement was signed between the two parties, which resulted in a giant body managing nearly $1 trillion in assets. In the same year, BlackRock achieved another milestone by buying Manhattan's Stuyvesant Town, Peter Cooper Village, for $5.4 billion. But it later caused heavy losses to the clients, including a $500 million loss for the retirement system and the California pension.
I am still learning today as much as I was learning 36 years ago when I started in the business.
Robert Capito played a crucial part in the success of the firm. His critics even acknowledged him for never going easy on efficiency. According to many, he and Larry were like the inseparable yin and yang, where Capito took charge of all the unpleasant decisions, allowing Larry Fink to keep up with his high profile and excel in networking and grand strategies.
That's an awesome responsibility.
Despite the Cooper Village disaster, BlackRock was much better than others at driving the firm out of the turmoil. This was made possible by the expansion of the solutions business, which offered more than just the Aladdin to external clients. And then crisis hit. The 2007 to 2008 financial crisis, followed by the Great Recession, left banks with trillions of dollars in worthless subprime mortgage investments and resulted in many people losing their homes, jobs, and savings.
2008 was a tumultuous year for the economy. The housing market collapse created one financial crisis after another, and it often seemed as if the news could only get worse.
With its market expertise and a comprehensive financial advisory group, BlackRock's Solutions Unit was ready to tackle the crisis and help everyone, from competitors to foreign central banks and the government, inspect the toxic securities that had nearly collapsed the financial system. But this helped cost BlackRock its reputation, as many began to question the firm's connections with people in power. Larry Fink was questioned for having relationships with government officials and for being awarded government contracts without going through the competitive bidding process. From gaining relations with Obama's economic recovery team to aiming for Hillary Clinton's Treasury Secretary post, in 2016, Larry Fink led BlackRock to hire executive branch appointees for strengthening ties with the federal government. With the purchase of Barclays Global Investors, BGI, in 2009, Larry Fink was at the top of Wall Street, as this was the point at which the firm became the biggest asset management company globally.
Proud of what we've done. I don't want to suggest I'm not, but most importantly, I just see a huge horizon with huge opportunity.
In an industry filled with M&A failures, BGI's acquisition was an extraordinary success story. Its dominance was primarily due to the enhancement BlackRock made to BGI's existing lineup of index funds. Despite the great influence Larry Fink had in establishing a system that delivered investment products faster than anyone else, Larry isn't widely known in the public except for his interviews.
And I've been on your show now probably 4 times every year at the very least for 22 years as a public company, and even longer when we were private.
Not many know that Fink understood that massive success lay with small investors. By focusing on getting more people involved, rather than making big profits from a few, BlackRock now owns almost half of America's ETF market. Exchange-traded funds, ETF, are predefined stocks and commodities that distribute ownership into shares that are owned by their shareholders, entitling them to portions of profit. Another instrumental success of BlackRock has been the worldwide use of its platform, Aladdin.
Aladdin, which stands for Asset, Liability and Debt and Derivative Investment Network, is practically magical for many reasons. As of today, it is the world's largest asset manager, handling a huge chunk of the world's financial assets. The technology cuts across every asset class and every industry in the world.
Fink's achievement of making BlackRock a company with around $10 trillion in assets has rewarded him with the title of one of the most influential figures in the world of finance. Larry's leadership style can be described as hands-on and attention to detail. Over the years, he has proven his ability to analyze data and take measured risks to expand the company. His company includes technologies that are beyond conventional asset management, like image recognition, human speech processing computer programs, and machine learning algorithms to handle large amounts of data. The company paid Fink $23.6 million in 2010, which increased to around $36 million by 2021. In 2016, he was awarded the Abana Achievement Award for his leadership in banking and finance. Then, in 2018, Larry Fink was ranked 28th on the Forbes list of the world's most powerful people.
Someone who really does not need to be introduced. My dear friend, Larry Fink.
In his annual open letter of the same year, Fink addressed CEOs of different corporations to include a diverse workforce for the betterment of their communities. In his 2019 letter, he used his company's strong position to encourage the CEOs to take on the leadership vacuum and tackle socio-political issues that the government fails to solve. Fink's 2020 and 2021 inches open letters were all about environmental sustainability and how it could help solve big economic crises.
Welcome back to Squawk Box, and big news from BlackRock this morning. The company's CEO, Larry Fink's annual letter is out, and the world's largest asset manager now announcing the firm will make investment decisions with environmental sustainability at its core. Fink's annual letter to the CEOs.
It's public. We lost about $4 billion of flows from various states. But in long-term flows last year, we
Larry Fink is on the board of trustees at New York University and holds several chairmanships, including those of the Financial Affairs Committee, the NYU Langone Medical Center, and the Boys and Girls Club of New York. He has also provided strategic and policy advice on economic issues to President-elect Donald Trump. However, many companies and media houses have criticized Larry Fink's company for being involved in all those activities that he publicly opposes.
And the intersection of politics and business has never been more ongoing. I don't want to call it bad. I don't want to call it good.
Anti-war organizations criticized Fink's letter, pointing out that BlackRock is the largest investor in weapon manufacturers in the U.S. He was also included in the Guardian's list of the U.S.'s top climate villains for managing one of the biggest fossil fuel investment portfolios, all while directing others to achieve a net zero Earth. BlackRock has also made profits from deforestation, while asking the federal government for money to invest in climate projects.
Even a financial crisis.
More and more people do understand that climate risk is investment risk. And as more investors understand that, and I wrote this in my last year's letter, when finance really understands a problem, we move that, we take that future problem and bring it forward. And that's what we saw in 2020 and what we're seeing now. The flows even in January in sustainability funds are growing, not shrinking. Right. And this is going to continue in 2021.
Moreover, Larry Fink has also been accused of enamoring China and taking advantage of those facing financial difficulties. BlackRock was investigated by a Congressional Select Committee for its $429 million fund investment across 5 Chinese companies, blacklisted by the U.S. on the grounds of human rights issues and security.
China is just as dependent on Southeast Asia. They're just as dependent on global trade away from the United States. Think about the actions of selling U.S. treasuries. It means their currency rises quite a bit. That would hurt them.
BlackRock's response to funding PRC companies that create weapons for the People's Liberation Army was that all of their global investments have complied with U.S. government laws.
I do believe the trend in China continues to be downward.
Larry Fink has been troubled by Republicans who oppose investment managers being too woke. Though Fink has called out political critics for lying about his company, their backlash continues because BlackRock advocates for climate and ESG initiatives.
When you start thinking about the climate change impact and whether you believe in 5% of the science or 100% of the science, we don't have a global government body to arrest this problem.
Despite all this, BlackRock is still growing, with people still choosing it for investments. The latest letter from Larry Fink revolves around the global retirement crisis and potential solutions to tackle it.
My letters are a reflection of my conversations with clients. So it is, and so over the past year, I heard more and more conversation about retirement, the retirement crisis.
He also hinted about his plans to rethink retirement, quoting, "No one should have to work longer than they want to. Crazy that our anchor idea for the right retirement age is 65 years old."
The United States is that we have still 57 million Americans who don't have any savings or any retirement plan. Social Security is a fantastic foundation for retirement, but if that's all you have when you retire, you're going to be living in poverty, below the poverty line, because it just is not, it's supplemental, but it's not meant to be the totality of what you have in a retirement. And the whole concept of we're aging, we're all living longer. And I think one of the big narratives I've had to reflect in 2023 was the miracles of medicine.
Larry Fink is considered capable of handling difficult challenges, even by those who are in disagreement with his empire building. With Larry Fink's plan to incorporate an artificial intelligence theme to boost productivity and wages, what do you think lies ahead for BlackRock once Larry Fink exits the scene?
And that's going to empower more people to have more opportunity. But more importantly, we're going to need huge sums of money to invest in these data centers.